The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And it looks like they're pushing this market to absolutely have it priced for perfection in the morning with the jobs numbers. And we're going to get into why it doesn't matter. And at least that's what I'm being told. Anyway, we're up 16 points on the S&P cash, 2057, 2.37 billion shares. Since about 11:30, the volume has gone incredibly light. So somebody's waiting for something as they hold this market up. I'm kind of holding a mirror next to the mouth to see if any steam comes out. What a kind of a strange way to see whether or not people were alive if they could fog up a mirror. You'd think even back then someone would have known you could put your fingers on their neck and feel the heartbeat, but I don't know. It just seems kind of weird. Maybe you weren't allowed to touch people. That's all I could think. But seemed to me like a much better way than trying to see if they had foggy breath. But I do digress. You could kiss them? Ugh. What if they were dead? Then you're a necrophiliac. So no, you can't kiss them. That would be bad. Yuck. Yes, it would be. Anyway, I digress once again. And, of course, we've got a market I suspect is waiting for the jobs numbers in the morning. I'm expecting a surprise. There's just been so many people out of work as the crude business has fallen. Of course, crude up again today, seeing a lot of volatility. I'm wondering just how much of this may be artificially instigated. We're up 2 points on the S&P cash. The reason I say it is talking to Tom O'Brien, I think during the break or after the show, maybe before the show on last Friday. And we were talking about one of the guys buying a bunch of crude when it was down around $43 and putting in a bunch of ships, and they were just going around in the Gulf. And maybe Andy will talk about this kind of activity in his show. But they bought and sold futures against that crude, and we're just waiting for it to go around. $5, $6 on a tanker full could be a huge amount. And, of course, if it goes against you, of course, if you're selling the futures, you just pull up to the pumps and offload it again. So they apparently thought that there was enough out there, but kind of interesting to see why you can't get $1 for a ship to actually move a ton of iron ore, but you can't hardly find a ship at all to put crude in. And certainly looks like there's hijinks afoot. And that's a word I want to bring back, hijinks. You don't hear it enough. Like skullduggery. Now, when's the last time you had skullduggery in the conversation? But again, I digress. In the meantime, this is a rather interesting day each year for me because history just keeps repeating.
That it's all just a little bit of history repeating.
On this day in 1637, the first major recorded bubble in a market pops, tulip mania. This was a deal where everybody in the Netherlands decided they were going to trade these tulip bulbs back and forth. The tulip bulbs had a genetic, would I say deficiency? I wouldn't say deficiency, anomaly that made them incredibly beautiful compared to regular tulips. But everybody kept trading these back and forth like beanie babies. And the Wit Kruno tulip bulb basically reached 1,345 guilders per half pound, up to 2,500 100% in 33 days. Over the next 5 years, the bulbs lose an annual average of 76% of their value until they fetch only 37.5 guilders in 1641, causing a huge tectonic shift in the power of Europe. To that point, they were huge traders and it pretty much were in control of everything they surveyed, but kind of blew up in one magic ideal of mass insanity for a country. If you want to check out this and other news articles about this day, you can always check out Jason Zellwig's blog, This Day in Financial History. And I've got the link here if you're watching on Tiger TV. But like I said, and like the gal says when she sings, history is just repeating. And from books that I read from the 1870s, financial books, to books that came out in the 1930s, to books that come out today, what has happened in the past will happen again in finance because it is human nature. And it doesn't matter how many computers you get in there. Either the market's going to do nothing because the computer's always going to know everything, or you're going to have human people with emotions involved, and they will repeat the same mistakes over and over and over again. But generally, the same people don't have the same mistake because their cash is already gone. If you live long enough to gain experience, you'll look back on these days and think, shut up, old man. You and your .com talk. This market, it's different this time. Quit yelling for me to get off your lawn and just let's do what we need to do here, which is just drive this market up higher. And of course, I think we're in at least halfway through a bubble cycle, if not fully through it already. The reason why is we continue to see higher prices in the index, with the EPSs actually falling, especially over the last 6 months. We have one big winner per night, like Disney or Data, and we have 20 stocks trading lower, 4 or 5 of those decimated overnight. And the leadership just continues to get narrower, and narrower. For what I can see, I'm watching a couple of stocks that I am short. They've run pretty much all the shorts out of the marketplace. Some of these stocks are off 1.5% off of earlier highs today and are way back into the trading range. They ran right up to my stop. I normally have stops where if we close over, or it looks like we're going to close over that level, then I'll issue a warning to my readers to go ahead and get out of the stock. But if it hits that level, I'm not instantly out. I'm always watching these stocks. The miracle of smartphones these days. Before that, I actually was one of the first people to have the Sprint Wi-Fi cards, and always had my laptop with me, even if I was out eating lunch somewhere. Always keeping a weather eye out for my positions, and now the positions of my readers and subscribers. But what can you say? Anyway, there is a great book out, and I don't probably talk about it enough. I've actually written a cheat sheet on all the books that were worth anything that I've read for the stock market. But this book is called A Short History of Financial Euphoria. It's by John Kenneth, Kenneth Galbraith. And I recommend it highly to anybody that's been in these markets for more than a day, because it will give you an idea of what happens when the madness of crowds takes over the fear, and you have only but pure greed driving markets. My guess now is it's not pure greed. It's all about one thing, and it's not all about the base. It's all about the too much money sloshing through the system, not going to the people it needs to go to, but going into the market and causing a bubble. And what else can you say about that? Of course, today is the end, my friend, The only end, what is that? How's that go? The end, my only friend, the end. Yes, they're singing probably that song on the CME floors today. By midsummer, the only open outcry market left in the United States will be the S&P 500 futures. They're talking about getting rid of those by the end of the year. I think market overseers, the overlords of the market, want to see how this works before they get into it. They'd love to see at least the futures market open in case something really happens, like a terrorist attack on our infrastructure and internet, that at least somebody could pick up a phone and call somebody and move markets with the futures. But it's unclear now. Of course, I can make all those funny sound figures and wave my hands back and forth. I'm sure Mr. Heck is familiar with those. But for those people that weren't watching, I was waving my hands madly like the interpreter in the Nelson, I can't even say it now, Nelson Mandela wake and funeral. But I am not taking a selfie of myself. So we'll have to take a look at that. Yeah. Oh, Morrison singing The Friend, My Only Friend, the End. No naughty selfies on my phone, no. No one's going to hack my phone and find any nasty pictures of me or anybody else. They will find pictures of my dogs. And that will be it. What else is going on out here? I said it didn't matter, and to the most part, I can tell it doesn't. We're sitting up here pretty much at the highs of the day. Again, like I said, very, very light volume since probably about 11:30 in this market. And it makes me think that we are going to probably see some very big action tomorrow. They're pushing this market back up to the highs without volume means if we don't get a really big surprise in those job numbers, you're probably going to need to really watch out what happens. 2.45 billion shares. Last couple of days, we've been approaching 3.2 billion shares by 3 o'clock. So we'll keep an eye if any volume comes in. But as far as I can tell, I'm looking at some things that I'm short, and they had some tremendous runs out here, but one's off, maybe 20, maybe 0.2%. And the other one is up 1%, but was up almost 3% earlier. So a lot of these have rolled back over and down, and we will continue to keep an eye on those. But like I said, earnings just doesn't matter, it seems like a degree from the online university. The plot and Mission Impossible 2, the price tags at a 99-cent store, or the word international in the International House of Pancakes, this doesn't seem to matter. No one cares about stock earnings, and that's what's got me nervous. I do care, because I know one day it will matter. But not today. Just like a degree from an online university. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back. Had a question in the den about O'Reilly Automotive. What's the deal on it? And of course, I could tell you this because I work on my own cars, change my own oil. I kind of like knowing how things work. I always have. In fact, I got in some rather big hot water as a child because I took apart a tape deck, the old reel-to-reel kind, to see how everything worked. And of course, I couldn't put it back together. And boy, did I get the Dickens spanked out of me for that. But it was pretty early. I guess I was probably 10 years old when I did that, or maybe 9. And from that point forward, my dad started buying me Heathkit things to put together instead of have me tear apart his electronics. Pretty interesting. But every time I go in there, the place is packed. And of course, when I don't have to call and complain to the CEO that they're playing more horrible reggaeton music or something. Just the closest one tends to be absolutely packed with south of the border speaking folk. And we'll get back to that in a minute, but I think we got a 3-gap play setting up. Anyway, Steve from Houston, how you doing today?
Dave, doing fine. How about yourself?
Just another day in paradise, although I heard the heater kick on, which just absolutely, you don't know how that just drives me to the core. The air conditioning, not a problem. The heater has bothered me, but I'll try to soldier through. I know a lot of people, Bataan Death March, other horrible things happened in their lives, and I'll get through this just the same.
Dave, like I've said before when I've called in, I love your humor. You got a great sense of humor. I love it.
Well,
hey, I just wanted to ask you. I just wanted to get your opinion on the FAZ, the financials. The financials have rallied here after coming, the gap down. They're rallying back up into that gap in some of them. What do you think of the financials on a short side?
I think, you basically have a fairly decent setup out here. The only question is whether or not they drive this market much higher. And I just see the volume, 2.51 billion shares here today. Technically, if you believe Wyckoff Trading, we are at some kind of Rubicon where the volume falls out. For the last couple of times we've come to this level in the S&P, so they keep driving it up here. And I said today in my newsletter, it's a Mexican standoff. A lot of people hear that but really don't know what a Mexican standoff is. That's where three people all are going to shoot and try to kill the other two, but as soon as you shoot somebody, the other guy, you shot somebody else. So if whoever shoots last gets to shoot you, and he's the last one standing, right? So we've got this kind of we've kind of got this round robin thing where everybody knows if they start selling, the whole thing's going to fall apart. It's kind of a prisoner's dilemma. Right. But it's hard for me to see how, unless we had a major change somehow in the next year and a half, which I don't think can happen in the president, nothing's going to change. We're going to continue seeing the current administration go after these banks time and time after again with their hand in the cookie jar, and yet another $5 billion fine here and another $5 billion fine there. And of course, we're going to see just a whole more can of worms coming out anytime soon on all these things with commodities and everything else. And to me, it's hard for me to see these things up here and think, with the volume patterns, that they aren't massive shorts. Although one of the things I hate doing is see these financials, because they're able to keep these stocks up for a long time.
Right.
That is, you just drag it out and drag it out and drag it out, and they have their own trading floors so they can make things look good. But I don't, and I'm not bullish on these. I just think that we're probably going to see a lot of other stocks fail first, and these, along with the biotechs, are probably more likely to fail last. And really the only thing kind of holding up these markets is the belief that somehow higher rates are going to mean that we're going to have more cash in these. You want to hang on through the break?
Okay.
Okay, we'll be back in just a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back, and on the line, we have a Kurt. Oh, actually, have somebody else, actually.
Steve.
Yeah, I know, but there we are. I have to scroll much higher up than you. Steve from Houston. Anyway, we're looking at FAS out here. I don't see any problem with it. The biggest problem you have out here, as far as I can see, is, maybe you're starting an ABC up. I like the retrace out here. Your risk is out to $12.06. You just don't want it closing down there on a lighter volume.
Yeah, I agree with that because it seems to me like it's kind of basing here, and when it's pulled back with a little lighter volume. And when I look at Goldman Sachs and J.P. Morgan, both of them on a longer chart look like they've had an initial break and they're kind of consolidating or moving back up a little.
Yeah, the one thing you have to know on those is just like another one that I shorted yesterday, and that is I went out into April and May for puts, because those are not going to be easy ones to crack. When they crack, it's all going to be huge cash, but it may take March, April, May to get into those before those crack. We'll have probably the small caps crack first again, but that will be interesting. But no, you're down here where I'd be thinking that you have the opportunity for an ABC up. So hang on a second here. Okay. You got basically you got your 381 retest. This thing's moving back down. You're into high candles with lighter volume so far today. Yeah, I don't see any problem. The downside with this market is if we are right to the downside, it's probably just going to open up 50 or 70 points lower and not give anybody any opportunity to get in short. And that's the downside to trading one of these kind of markets. It's going to be a big surprise, just like all these earning stocks. You wake up and, Green Mountain Coffee's off $15. You can't short it then. You got to hope for a bounce. And while we've gotten a couple of them, eventually you're not going to get it. I'd say you're good to go right here. Just don't want it closing below 1206. And as far as I'm concerned, you've got $19.91 out there hanging for a high volume high that's going to get tested.
All right. Well, anyway, like you said, put stops in and, not risk a lot. I feel the risk is a little bit lower down here, so that's why I did it. And we'll see what happens.
You could have a nice little ABC on the way up here. Where would that take you to? And then we're going to get to yet another caller. A, B, C. Okay. So that would take you to where? ABC would take you to $15.98 if today is the low.
Yeah.
So, $3 up, $1 down. You're in the ball game. I like the way this thing is going up against the January 22nd low out here that had 6.2 million shares. If my volume's right at here at 1.7 million shares, you're down below that big volume day. So I think you're looking good as long as volume remains low.
And watch the stops.
Yeah, you just don't want it closing below 1206, right?
I agree.
Okay.
Totally. All
Good
right,
enough.
Dave, thanks so much.
You're welcome. And we're going to go to Kurt in Spokane, Washington. How you doing, Kurt?
Hello? Good,
Yeah.
how are you?
Fantastic.
Excellent. So I'm curious about your thoughts on oil.
I keep looking at oil out here, and to me, this just looks like some market gas, probably some shenanigans being perpetrated on a market, just like they kept driving it up at the highs. To me, this just looks like a short blurb out here, and I'm just not expecting anything more than probably a trading range between 45 and 48 bucks, kind of on the high end of that today. Sold off a great deal of that, but to me, I don't see anything in those numbers. They're still climbing for builds, and every time I was talking to Andy, I think the day before yesterday, or maybe it was yesterday, about the head of OPEC saying crude was going to 200. And it just seemed to me that I think crude instantly sold off $3. This seems to me like there's a lot of wishing going on over there in Saudi Arabia now. Without any kind of major war going on, it's hard for me to see these things don't at least go back and try to test the lows at 42 or 43. What are you thinking about going long?
Yeah, I'm looking at an ETF, UWTI.
Yeah, I just can't see not waiting for crude to go back and do a retest of the lows out here. I don't think anything fundamentally has changed, and it may take 2-4 weeks or something to see that low retested, but my guess is it would, and that's where you would probably want to pull the trigger. Just too many shenanigans going on, too many people basically filling up tankers and running them out, and for all I know, this is just another, what they used to call in the olden days, a thimble rigger. There's a lot of people, the man behind the curtain, let me put it that way.
Yeah.
So I would wait until you had a much more probable profit, and that's going to take a retest of the lows. And since they came on such high volume, you probably got some kind of 80% chance that you're going to see a retest of those lows and greatly increase your opportunity to make a profit off of them.
Okay.
To me, this wild gyration is a combination of the dollar move, and probably with some people that filled up a lot of tankers, took them off in the Gulf of Mexico, and are going to drag them right back in as soon as they make a few bucks.
Right. Okay.
Okay.
Thank you so much.
You bet. And Andy, of course, Heck, our commodities dude, is going to be here at 5 o'clock. So you get a whole hour. Maybe he'll talk about all the games that can be done with futures and giant tankers out there circling the Gulf, because it certainly is an easy game to play if you are, I don't know, a big house on the street and you have all the players' cards and they show them to you every day. You know when everybody's on the wrong side of the fence, and kind of easily to move these things $3-4 a day when there's no real reason I can see that they could change. Easy if you have a lot of capital, Andy says. But maybe he'll talk about that in the Tom O'Brien Show, following me on most of the TFNN radio network and podcast network, and just networks of all kinds. But I do digress. Anyway, we've got a few stocks that are making some interesting moves. You can call me at 877-927-6648, and I appreciate Kurt calling from listening on KSBN up there. And what else do we have? I want to look at a couple of them. Alcoa came out with earnings. And this, again, it goes back to the commodity side of the business. If I can actually get these things to come up. I don't know what's going on out here. There we go. Alcoa, of course, came out with earnings, had a big move, gave it all the way back up, came down with higher volume, is out here today with lighter volume and much lighter volume, up on 14 million shares going through the January 13th high. And I suspect that part of this is that Ford is saying their F-150 is having fairly decent sales numbers. But you've got to watch very closely here that this came down on big volume. You've got an untested low on January 14th with that large volume. You're testing the top out here with lighter volume, and that's going to continue to say, is this a false breakout to the upside? What you would really want to watch in these commodity stocks for aluminum is the January 13th high. It closed back below that fairly quickly, would imply a false breakout. My guess, too, is that you still have this $13.71 low in Alcoa that probably is going to get tested. I think you can make a good case that this is a false breakout, which would imply that this thing pops back into the trading zone fairly quickly. Alcoa cause many pots. Okay. Other things going on out here. There's some stocks that should be bouncing, especially if we're up 20 points on the S&P cash, actually up 16.5. Right now, 2.6 billion shares. Again, volume has basically gone to vapor and continues to go lighter into the close. And that probably suggests that everybody is waiting for these jobs numbers in the morning. I've just seen how many companies, especially in the energy sector, have laid off people. It's hard for me to see that they don't come as a surprise in one of these. So I'm going to wait to see what's happening. I've got some fairly decent positions out here, nothing that is out of the norm or breaking through my stops. So I'm more than welcome to sit on my hands one day more and see what happens out here. Just kind of interesting to see market continue to push higher as EPSs push lower on the broad market. And it's been a rare event where a single stock can hold an entire market up. We've got maybe a couple, Disney and Apple. Even Apple, though, has been up here at this highs. You can make a case it's made a little high out here. Anyway, ACCO brands, we brought this up. I wanted to see these things start to bounce out here. Light volume doji. So if you are bullish and somehow the market turns on me, I'll be looking hard at this one tomorrow. Gapped up on significant volume on October 29th, with 6.3 million shares, back into it with 1 million shares. This thing, especially on today, should have had a decent bounce. It has not. And again, this is kind of the canaries in the coal mine that you want to be talking about. We're looking at Amazon coming back up to its gap. You've got to watch that. Oh, I need to get back to looking at AutoZone, which we will do before the end of the show. In fact, I'll do that next again. Anyway, Amazon's back up to its previous highs. When we got into the huge gap down last time, it was March 13th at 383 with 6.8 million shares. You got 5.5 million, so you're going to get close. What you're really fighting is this $16 million share down day that opened that gap on the 31st of January a year ago. Now, you've had a huge energy when they came out and said that they were going to actually quit spending as much and start trying to make some money. The EPS is still ridiculous. But you're probably going to find a lot of resistance at this level. If you were long Amazon, I would say at 383.11, if you don't get a lot of volume the next day or two, that you're going to pretty much have a wall of sellers at about 390 that are more than happy to get their cash back. On a technical basis. Maybe it goes higher from here, but my guess is you're going to have to wait a while as that consolidates out around that 380, 390 level. ARMS Holdings, like we said, looking at Apple, some of these other stocks try to break out over gaps down on volume. In this case, it was April 23rd of 2014. It came down with 4.3 million shares for ARMS Holding, ARMH, the symbol on that. So I see 1.3 million shares as it pops today. What worries me even more is this September 2nd try to get back into that gap down happened with 2.4 million shares. That we're up here on 1.3 million shares means that we need to have follow through with a volume on this most likely tomorrow. You've got 3 gaps in this that are rather small. We were talking about AutoZone, so no, O'Reilly, excuse me. And it certainly looks to me like my rules for 3-gap plays would be satisfied today with O'Reilly. Now, this thing gapped up on 3 pretty decent volume days. To begin with, the first gap happened out here on February 6th of 2014 with 2.7 million shares. You've got 1.8 million shares on the 23rd of October. And this is the last gap with 2 million shares today. And we've given about half of the little pop out of here. But if you were thinking about shorting this, you look at the high of the day as your stop and the ability for this thing to rapidly come back and fill all 3 of those gaps would take you back down to 140. I'll be watching this over the next couple of days and see. There is a good reason for these automobile stocks. Like I said, I go to the auto parts store probably a couple times a month. I just like doing my own work. Turning a wrench, as they say, and kind of getting in touch with my greasy-fingered self. But, you got to watch these here. This is how a lot of these will end and start back into the consolidation. We'll come back and look at a few more stocks before the end of the day. You can call me at 877-927-6648.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, we're looking at the markets start to close up on the day. 2058 on the S&P cash, 2.7 billion shares. So volume off, about 500 million shares? Yeah, off about 500 million shares from this time yesterday. So it is a light volume, but not uncommon ahead of big numbers in the morning. And I think maybe more than a few people are thinking maybe there's a surprise coming. Maybe there is, maybe there isn't. I think that we're probably going to have some decent action tomorrow. But already seeing some people get out of the way of some of the most volatile of stocks. Some jumping in to the most volatile of stocks. So a lot of divergence out here in these, and I think it's kind of interesting. Anyway, looking at some of the other stocks of interest out here, I'm going to take a quick look at CMG. because we didn't yesterday. Now, you've got a nice gap with high volume, and I had a few people ask me where they think this is going. It just looks to me like it's in a bigger trading range right now. And, you probably get back into this gap up at $600. That gap happened on, July 22nd of 2012. Or, excuse me, 2014. 2.2 million shares. You're down at that level with 2.4 million shares. That's what makes me think we could continue to see movement back down into this gap and see it filled all the way to $600. And of course, a few issues out there. Of course, their pork, not being able to give it out, but higher expenses. They also said that they were going to be raising the price of many things, including steak, I think. And the question is whether or not that's going to lose them a few customers. Buffalo Wild Wings, WLD, I think it's coming out with earnings tonight. And a lot of people know that I like to go there on Tuesdays and Thursdays because they have half-price wings on Tuesdays and half-price wings on Thursday night. And I can still spend more than getting a nice 12-ounce steak at the Roadhouse, which is kind of tough to think that wings are expensive as a very nice steak dinner. But the question is, they said that they're going to continue raising prices. We are through probably the seasonal highs of Buffalo Wild Wings in that we've got a little bit of March Madness, and then that's it. Normally, they start selling off after that. The question is whether or not they can hold those highs with the prices of Wild Wings. And I think that there's more than a little evidence to say that they're probably fairly close. Can they raise prices one more time and still keep their customers, especially through March Madness? I have to tell you that it's very expensive to go there compared to another place that has the same TVs. There is the ambience of sports people there, but to me, this thing looks like it's fairly precarious. Once they start losing their customers because of rising prices, I suspect this thing is going to have a fairly quick move back down to 140. I just don't see any technical indication of that. Just as a customer, I see probably less people buying food. They're buying beer, and that's about it, and going elsewhere to eat when I'm in there. But even then, if you can spend $15 on 12 Wild Wings and some celery and some other stuff, seems to me awful high priced. But that's just me. We'll see you tomorrow because we're going to have some action tomorrow after the jobs numbers. Remember to sell when you can, not when you have to. See you tomorrow. Same bat channel, same bat time. See you then.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.